Stock in focus is Adani Ports, and Adani Ports, what they did was that they called over the entire analyst community and they told them about the Krishnapatnam Port acquisition. Remember, the company acquired the Krishnapatnam Port earlier in 2020, and post that the company has gone ahead and done significant changes and significant operational efficiencies have been met, that they decided to go ahead and give an update as far as the analyst community was concerned. Now, overall, when we are talking about Adani Ports, now this particular stock, the entire analyst community has turned positive post the extremely strong and bullish commentary that the company has given as far as the Krishnapatnam Port acquisition is concerned. And the one line that most of the analysts and most of the brokerages have mentioned is that the Krishnapatnam Port turnaround has been much faster, has been much quicker, and has been much higher than what they were anticipating. Now, what's actually happened is that the Adani Ports has turned around Krishnapatnam acquisition significantly ahead of previous estimates, leading to significant earnings upgrade. Adani Ports has turned around operations more efficiently than anticipated. Most of the brokerages, even Nomura, had estimated that cost measures and operational efficiencies amounting to close to 224 or 240 crore was highlighted by the management now appears sustainable. It appears as though the operational cost per ton would now be declining by 20% on a year-on-year basis for FY21 and further 16% by FY22. Now, also what they're doing is that they're talking about the other assets as well. They're talking about Dhamra as well as Krishnapatnam Port. They believe that Adani Ports can deliver a 12% plus return on capital employed on its acquisitions. And also what's actually happening is that the underlying port volume growth, excluding the acquisition of Krishnapatnam Port, has been quite robust at 22% and 10% for October 2020 and November 2020 respectively. Also, very importantly, Adani Ports is now becoming an extremely strong player when you're talking about the entire ports companies in India is concerned. The market share has gone ahead quite significantly, now almost at 25% versus just around 21 to 22% earlier. What Nomura is saying is that they are valuing Adani Ports on a sum of the parts basis. They are applying a DCF with a cost of equity at just around 10.5%, and this makes them arrive at a target price of 530 rupees per share, implying a 17% upside from the trading close, and they've also maintained the buy. The only worry, according to Nomura, is that weaker than expected volume growth is something that can take a toll. Price hikes also taken by the company has led to significant margin improvement.